what is the point? Value area is broken. What's my expectation when the value area breaks? Is it for us to come back into balance? No, of course it's not. It's for us to go imbalanced, okay? So remember that one. Do you know what? You can imagine they're so logical. After a bit of time, you won't even need to remember these. They're not hard and fast rules. They're just what the market is basically doing. Like I said, in everything around us. Don't just think of financial markets. All markets are doing this. And if you go and observe this in the real world, even at your local supermarket, newsagent, bike shop, here, there, each and everywhere, this is what's happening, right? When prices are in balance and they shift and you build heavy transactions agreement above, it always starts to then creep up in terms of going balanced. It always happens. And I'm not talking about if we just pop out and come back in, because that's just balance, isn't it? We talked about it here. Do you see, we just popped out and came back in. I'm not saying that. When I say broken here, I mean there's agreement with buyers and sellers that this could potentially be the new fair price. And how do we know that? Obviously, we see some build, all right? We see some two-way action, some price determination, a decent auction taking place here. Then we can say the value area is broken. And I talked about acceptance and rhythm. This is really acceptance, and I will talk about this when we finish this section, so don't worry. I'm going to talk about how we can... There's no hard and fast rules. I've said this before. If there was, we'd be sitting on a beach, sipping cocktails, and we just put that into a computer program, and it wouldn't work. Because you know why? Because everyone would do it, and there wouldn't be a market, basically, for this. Because algorithms would identify this before you, and they'd get in, and they'd front run you. You'd never make money if it was that obvious. And you know what? People don't realize this, and I don't want to go on a tangent, but in retail, doing all these things where people say, follow me, do what I'm doing, they don't realize. If it was that obvious, I can assure you, there's people out there with millions, billions, building algorithms. They put that in the system, and that opportunity get wiped out like that, right? I showed you how competitive it is. That's why I'm saying the only way you're ever going to build edge is if you can find ways to identify this happening, not before every single person, but obviously before some major players come in and other algorithms come in. And I'll show you it's very possible. It just requires some observation and skill that you will build over time. So I'm going to get you started with that when I say with the acceptance and rhythm. But essentially, we will identify when the value area has broken. Obviously, the expectation is then for us to go in balance. So that's the point. Now, there is a slight variation on this, okay? So what I'm going to do is, actually, I'm not going to delete this. I'm going to show you. And I'm going to be honest with you. I love this because I see this happen a lot. So it's very similar scenario, right? Where you've got your balance happening. Do you remember? We're going balance to imbalance. So we're flipping, aren't we? Balance to imbalance. Is if the point of control holds. So do you remember I said, I know it's a bit, look, end of the day, markets are not going to make your life easy. You will see markets test, but they will come back to this area because at the end of the day, that in theory is where the most price acceptance was, because the most transactions took place there. It's just that obviously the market likes to gyrate. And I said this before, in Cadbury's Cream Egg, it's the same thing. It's not only financial markets. They like to test the edges, don't they? To see, can we actually hold? But what will actually happen, and I see this happen a lot, is the market will come in and, I said to you, I take off 50% at the point of control here, mindful of point of control VWAP. When we come back here, what sometimes happens, and it does happen quite frequently, is we'll start to build some value off here, okay? And it's a big clue that we're starting to develop some intention in this area, some pressure in terms of market orders building. And sometimes you can see this in the cumulative delta or whatever. Obviously, we'll come on to this later, but in the order flow, it's not you know, don't get me wrong, order flow is not a magical tool, and only if order flow tells me. Obviously, there's nuances you'll pick up over time, but essentially you'll see value building above the point of control, and the expectation is potentially to go in balance. And I've put here expectation 1 to fail. What's expectation 1? For us to test the other side of balance. Do you see, rather than this happening, that will fail, will hold. That's why I take my 50% when I'm doing what? Testing the up. I'm in a rotational environment. I'm expecting us to do what? Test the other side. I'll have scaled out of this. If I see us building here, can you see how dynamic the markets are and why you can never have this? You're in dreamland if you think it's like, let me just set one stop loss, one take profit. No, because can you see the market's so dynamic? It can start giving you clues like this, and I'll be like, do you know what? It's obvious to me the market isn't going down here. I've taken 50%. I'm not going to let the position take me out. Let me just exit the whole lot when I see this building, or have a thesis that we're going to go imbalanced, and expectation 1 is going to fail. That's why I say have this stuff in front of you. For me, I don't look at this, obviously, because it's in my head, and it's just so normal for me in the moment to react. That's taken years to obviously develop. But I put this list together because I thought, you know what? Obviously, I'm teaching, and it's nice to have it, but also I thought it'd be nice for you guys to print it out and have it in front of you. So that's essentially what's happening there. And you know what? I just realized here that I've put balance to imbalance, but I haven't put imbalance to balance. So look, don't worry. It's just the opposite of what you see happening here. So let me just get rid of this. Okay. It's literally just the opposite. It's not any different. When you go from balance to imbalance or imbalance to balance, that shift. Because what you've got here is you've got a rotation environment, you go up, you build value, and then you go imbalanced. Actually, when you go imbalance to balance, it's no different. You know, your market might be imbalanced like this, and then you come into a rotation environment and you start to build value here. Guys, your imbalance is finished. You know, at the end of the day, that's it, it's over. So here it's the value area is broken outside of the rotation environment, either there, or obviously it can happen here and we go imbalance down. All that's happening if you go the other way, if you think about it, from imbalance to balance, is the value area is still broken, but it's broken from outside coming in, right? You're outside of rotation, you're coming into rotation. Here, you're in rotation and you go out of rotation. Obvious, right? It's just vice versa. So that's why I didn't put it there. I just thought I'd clarify that for you. Let's go on to point 6. So this is very similar to, in fact, it's just a repeat of point 4, where I've put here balance, rotation to imbalance. If the value area is broken, the expectation is to go in balance. So actually, it's exactly the same, okay? So I've just repeated the same point, really. And the reason I did that, I know why I did it, is because what it is, I just wanted to clarify that it is above and below, okay? So basically, we're in a rotation environment, okay? So it can be below, okay? So we build value below, and then we go imbalanced, okay? But it can be above or below. So what it is 4 and 6, you can almost just merge them together if you want. But I remember now, and it's not that I made a mistake and printed them twice. Actually, it was very intentional that I put this on here, because I recognized that I just wanted people to realize that all of these things obviously hold on both sides of the value area. That's all it is. So it's above and below. It's there, below, and then down, and then to some of you this may seem obvious, but you know, I just want to make sure that, like I always say, I want to make sure 100% of people get this, not just 95, 90 or whatever. So I don't want anyone to think, oh, Envy showed us an example just above and therefore it doesn't apply below. It's exactly the same thing, okay? It's above and below value. And then this is a very, 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 very important thing, okay? And it comes back to this expectation here, in particular in an imbalanced environment where let's say that you've got, I'm just trying to think of the best way to draw this. I am going to have to cover some of this stuff, I apologize. But let's say you come in, you've got your composite here, we're in a balanced environment, your RT8 session opens here. Let's say you start to build some value, right? So either here, value area is broken, expectation is to go unbalanced, or we build above basically and below the value area, right? It's the same thing. Is expectation is what? To go imbalanced, right? And do you remember, when you're in balance, where's the expectation? It's to go to the previous balance. My point is this. I've seen this time and time again, a million times, okay? Do not take my word for it. I want you to observe this yourself. Whatever you do, until you've observed this 100,000, maybe I'm exaggerating, but 100 times or whatever, only then can you actually sort of start to use this in terms of your trading when you've observed it for yourself, basically. Not just because I told you this, but from my experience, once major targets are achieved, obviously major targets are going to happen in an imbalanced environment, right? Because the market's going to move. Once you hit this area where previous fair value is, what will happen is, in fact, let me give myself a little bit more space. And you'll see why I want to give myself space. Okay, so we go up. God, sorry. It's not thick enough, is it? We go up, we go up, we go up, we go up, and then we come into our ultimate target, right? Previous balance. And then we consolidate in this area. Guys, honestly, I won't get involved in the market at this stage, very rarely. Once we've achieved a big target, it will peter out. Loads of people know this, they close the books and it basically turns to mush. Okay, I wouldn't even look for rotational environments. You'll just get algorithms left. All the big players will leave the market and therefore you'll just be left with algorithms just messing around and you're just going to get chopped up. Okay, you're going to get chopped up. So my suggestion is just once you've hit a big target, that's it. Time, it's not on your side, basically. That's it, it's over. Whereas here, obviously, there's great opportunities, but once you've achieved a major target, that's it. Because think about it, what's it done? The market's found fair value, it's happy. Okay, generally, not always, obviously, if it's early on in the day and we see some huge value building here, and I don't know, for whatever reason, another 5 reasons I've got where I'm expecting the market to continue, then yeah, I might go on. But generally, don't forget, these are not hard and fast rules. You'll never succeed in the long run having, when A plus B happens, this must happen. It's very dynamic. It can change, like I said, but have an expectation. And my expectation generally, and you know what, it is very high, usually 80-90% of the time. I'm just going to switch my computer off when we hit a big target, like crude oil. I'm just making these numbers up. Don't quote me on this, because it will change. Different environments, different average ranges, what period we're in, seasonality will majorly change this number. But let's say, something like crude oil, I've made 50 ticks, 100 ticks on the day. I'm done. Not because, I made 100 ticks, so I'm done. No, because we've achieved something, a major target, and the market's happy, and it's likely to, that's a terrible balanced picture, but it's likely to balance. So anyway, look, I hope these were useful. Like I said, and I'm sorry I went on and on at the start about, the etiquette thing, but it is important, because I don't want this to be out there and someone in a professional environment to turn around to me and say, Envy, why did you do this? Why did you put this down and put this out there in public? Not because it's secret, because can you see it, just a bit of, it lacks professional courtesy. That's all. That's why I said it. But I hope you find this useful. Guys, make 100% use of it, print it off, have it in front of you. Like I said, discuss it with other professional friends who you think may find this useful, and will obviously adhere to what I say. I'd really appreciate it. But yeah, like I said, I hope you found it useful. If you've got any questions, obviously let me know. Or, as I said at the start, talk about it in the Discord with each other. What I'm going to do now is, I'm just going to quickly show you what I want you to do in task 2, where I want you to start marking out the contextual areas for you that you're going to trade in. And I do this every single day. I'll mark them out and I'll show you what I mean. And if I spot any of these value expectations that I've put together, then obviously I'll let you know. So let's get onto the charts. Okay, ladies and gentlemen, so here we are. I've got crude oil in front of me. And what I actually decided to do is, when I was doing the first part of this section, as you may have noticed, I've had some sort of amazing transformation at the click of a switch. And actually, it's not that. I was filming that quite late at night, and initially I planned to go through about 4 months worth of data, which would have been enough. But I thought, you know what? Let me just sleep on it, freshen up. As you can see, I was deteriorating as well with the beard and everything. And so yeah, I thought, let me clean myself up, obviously freshen up, have a sleep, and actually let me go through almost an entire year's worth, right? So you're in for a treat, because I can't be fairer than that, can I? I don't want 90% of people. I keep saying it, I don't want 90% of people to get it. I want 100% of people to get it. And also I want to give you confidence that, I'm not just picking, this is where you should merge and then give you the perfect example. No, at the end of the day, trading is about making decisions in tough, challenging environments where things are not clear, and at the end of the day, I'm going to show you that's what I'm doing. So it wouldn't be setting a good example if I didn't show you in all environments and all areas, gray areas, that I also make these decisions, and I want to give you the confidence to look. Sometimes you just got to go with it, all right, and have confidence in your decision making, as long as it's logical to you and it's done. Again, the same word, it's logical, it comes from a logical basis and has sound reasoning behind it. Don't let anyone tell you that it's right or wrong. Obviously, I've said this before, if it's miles apart, I am going to obviously pull you up on it and say, look, probably. So for example, this first one here, where value is here and values here, clearly there's no balance overlap here. So if you merge these two, I probably am going to say to you, like I said in task 1, if you do stuff like that, it's back to the drawing board. Let's see where the misunderstanding is. But if there's grey areas, as long as you are applying decision making that's logical, then it's okay. So anyway, like I said, you're in for a treat. I'm literally going to go through, it's almost an entire year, so I'm going to crack on, try and do it as quickly as possible, but as thoroughly as possible. And I also obviously want to show you some splits. I'm going to refer back to the value expectations framework, okay? And actually what I've done is, in the slide, when I was talking about it just now, I'd put, so I've got it in front of me here, because I don't actually have it in front of me. As I said, I don't like rules, and to me, what is in the value expectations are just logical. So, and just to sort of hammer that home that it isn't this set of rules, I've actually taken my name off it. So I'd put Envy's Institutional Value Expectations Framework. Like I said, it's only because I'd never seen it written down like that in the order, and I've just taken my name off it, and it's literally now called, so the printout I'll give you is called the Institutional Value Expectations Framework, okay? So it's just a generic sort of framework, logical, and as I said, it applies to every traded good and service. So a couple of things to note. Look, firstly, I normally do my filming at night. It's daytime right now, and even though I live on a quiet street, sometimes there can obviously be a bit of noise because it's the daytime, so I apologize if that happens, but it shouldn't be a problem. And to be fair, I live on my own anyway, so there's no house noise. It just might be from the street or whatever, although my missus is here because she's working from home today, but she's very, very quiet as a mouse, so there'll be no problems from her. And anyway, coming back to all seriousness, to the point, if you've noticed, I'm using blocks here, okay? And I'm obviously looking at crude oil. That's because in task 1, I used letters and I looked at the ES. So I'm giving you every single angle imaginable, okay? I've told you I like to use blocks. I've used letters in the past. Just because you're using letters in task 1, please don't switch to blocks if you like the letters. You know, I've got no problem with either. There's really no advantage, disadvantage. Obviously with the blocks, I do find that I can see more information. So for me, I like it. But like I said, it's entirely up to you. You can always squeeze the letters down, but you know, it's just it's not going to make you a winning or a losing trader, is my point. So let's crack on anyway. And I'm going to try and refer to the value expectations framework as much as possible. But like I said, because my habit for almost 8-10 years that I've been doing this, as of me recording this, has been never to have anything in front of me, I may forget to do it every single time. So you'll have to forgive me, but I'll try my best. And yeah, we'll just basically cover it as we go along, okay? So now, the other thing is, I do apologize. I know my head's over here in the corner. I can't actually see myself. So some of the lines, especially if they're cutting through, will cut through me, but that's okay. What I'll try and do is, very much whatever we're looking at, and hopefully I don't forget, and I'll curse myself during the editing when I just go to obviously put this all together if I have done it, but I'm going to try and really keep all the analysis in this part of the screen, but obviously inevitably there will be some stuff cutting through, and that will make sense. So very much in task 2, I want you to continue doing what you did in task 1, but now I want you to mark the composite levels, okay? So let's crack on. We've got plenty of days. We've got a lot of stuff to cover. As I said, I'm not going to merge these two, right? Clearly, I'm going to merge these two, okay? And I may even merge all 3 days, but let's have a look what it looks like. So merge with next profile, right? You've got that. Let's have a look. Split it. Do you remember I said split it out? See what it's trying to achieve. See, for me, I'm not going to merge those because if you think about it, that's value area of that day. Can you see? We built balance. We came in. We rejected, right? Very clear. Rejection at the point of control. And then we went imbalanced again. So for me, this day was very much talking to me, saying the feedback was what? I'm not interested in balancing, continuing this balance. So I'm not going to merge those. Okay, so let's do that. So just to remind you, I've merged this and this. Okay, now this is where task 2 is different. I'm marking these every single day. So what I do is, and don't worry, I will show you how to do this. I'll mark them like this, right? And the reason for that is so I can start using these levels in the future. Guys, I've been doing this for years, okay? And this is what I do every single day. Obviously, I don't do a whole year's worth. I just do it every day. It takes me like 2 seconds, literally. Obviously, when you first start, take your time. Take 20 minutes if you have to make a decision. I've been doing this for years. I've seen it hundreds of thousands, if not a million times. So for me, I'll just spot it, do it, job done, move on to the next part of my prep. But so the point is anyway that I'm marking these, but how do I mark them? So look, what it is with Sierra Chart, right? I know at first it's a bit of I'm never going to get my head around this, but I can't tell you the power of this platform. I've never seen anything like it in my life. Even the platforms I used to spend $1,000 a month on, you can't customize it as anywhere near as this. The speed of this thing blows any other software I've seen away. And as you know, it's cheap as chips, really, let's be honest, relatively speaking. So my point is this, I want you to also enhance and, really take advantage of the quality of this platform. And you're not going to do that if I keep telling you how to do things, right? There's certain things I'm happy to get you started. If you get stuck, by all means, reach out. Of course, I'll help you. But other things, things like messing around with it. Look, don't be worried. Just do it. Click on things, change them. You can always delete the templates I give you and then reinstall them if something messes up. It's not a problem. So for example, here, you can go in, set your own colors, chart drawing properties. Look, colors, styles, fill color. Guys, I can't tell you how many of this stuff I went through in the past. Obviously, for a few years now, I've stuck with it. But you know, when I initially started using this platform, probably spent months customizing it, messing around with it, changing those type of things. So don't be scared to do that. But anyway, I like to draw these. So there's only two tools I use for the drawing of this, and that is within here. Okay, tools. Can you see extending triangle? So you can either click on it, right, and then you can do that. I don't want to do that every time, so I like to have a shortcut. Tools. Can you see I've put it as A, right? And I'm going to show you how to do that in a second. The other one I use, as I showed you, is this ray, which goes all across to mark the point of control. Now you don't have to mark the point of control if you don't want to, but I like to mark it. So I find it very important. I think it's, end of the day, it's where the most transactions took place, right? It's that real fine point of agreement. But obviously we know markets are not generally just going to go in a straight line, are they? They're going to gyrate around it. But nevertheless, point of control is absolutely crucial, because I know there may be a reaction there. So anyway, coming back to this ray, right, which is that horizontal ray F. So okay, so what you do is you go here, global settings, onto your main console, and then can you see customize keyboard shortcuts? Click that, and then within tools, you see we clicked on tools before. It's the same thing. You're just customizing your tools, and then it's unbelievable, isn't it? The stuff you can customize in this is literally, it's just the bare bones. I love it. Where's it gone? Horizontal ray is F. Do you see? I said it. I don't care if you said it as X, Y, Z, Shift, Alt, Control, S, whatever you want. I don't care. Do whatever you want to do. I have what I have. Doesn't matter, right? Horizontal line, extending rectangle. Okay, A. All right, guys. So like I said, if you get stuck on anything, by all means reach out, but play around with it. Don't be scared of it. It's really there to help you develop as a trader. And if I keep telling you how to do things, it's going to actually hold you back. I'm not helping you. I'm actually doing the opposite by not letting you just crack on. But look, if you get stuck, reach out by all means. Okay, so would you agree? That's balance. Why do I extend these? Because I'm going to use these as contextual levels all the way into the future, because the market's telling me something. It's telling me that's where we are happy to transact, okay? So let's move on. So we come in, what happened the next day? Look, guys, there's trading opportunities here, okay? We've got balance. Do you remember when we shift? And I'm going to have to read this, because like I said, I don't actually have it written down, so I can't even remember what number I've put it at. So yeah, do you remember either 4 or 6, which is balance, rotation to imbalance? If the value area is broken, expectation is to go in balance, right? So don't forget, overnight there would have been some action, and when I get you using VWAP, we will look at the overnight session, and you know, more than likely, I mean, it says it closed there, so we may have, I mean, clearly we probably tested this level, rejected it, came up, okay? So at one stage, obviously we were rotational, right? We've come up and we've done what? We've built all this value above the rotational area. And do you remember when we go and break the value area, the expectation is what? For us to go imbalanced. And that's exactly what happened. Opportunity to get long, rejection, excess, opportunity to get long. And then obviously we just closed the day there and it kind of petered out. So this you would not be fading this, okay? That's my point. You wouldn't be playing this as a rotational day. You'd be playing this as an imbalanced day. That's your expectation, okay? Now, obviously, I've got a lot of days to cover. I'm not going to go through every single one like that. You know, you go and have a look at how it played out and so on and so forth. And don't forget, in terms of targets, I said when we're imbalanced, what did I say? Expectation is to go to the previous balance. So basically, typically, you'll have a composite level coming from the past, but obviously I need to start somewhere, don't I? So I'm starting basically at a random date. I can't just keep going back forever, right? So obviously, I'm going to assume there's nothing there. So I don't have any clearly defined targets, but eventually that will change, obviously, as you start to build composites, and that will become clear, you'll see. So anyway, that was a fairly balanced day, but we don't merge it, right? There's nothing to merge it with. Next day comes in, nothing. But what it is always remember, if you don't have any levels to key off, just use the previous day's value area. So what did we do? We broke up outside, we started to build some value. Expectation, when we break out. See, overnight, what would have happened here? We would have traded like this. Do you see, we've built value, guys. The overnight here, we would have been building some value. You would have come into the market. Obviously, you would have seen how supportive was order flow was there buying. And then boom, imbalance, right? Because we've broken out. So what was that? That was, again, the shifts condition, the identify conditions, balance, rotation to imbalance. Okay. So look, guys, you've seen I'm terrible at actually even remembering what I've written down. And that's because you'll get to that stage very quickly where it'll be obvious to you, okay? Obviously, if you break out of balance, you've gone imbalanced, right? It's logical. So to me, I'm not looking at this stuff. That's why I have to keep referring to it, because I don't even, like I said, I don't remember what numbers I've written down here or anything. To me, honestly, it just comes in, I'll look at it, boom, imbalance, right. My hypothesis is look, this is obviously just in terms of composites. There are obviously, if I say a million other factors, exaggerating, but there's a lot of other factors, like I said, the VWAPs and things that will possibly, counter some of this in terms of the conviction I have to get in balance, basically. There are going to be other factors, but we're just focusing on composites. Don't worry about all of that for now. Just think in terms of composites, start to get used to where your expectation is for the day, so you can start building a hypothesis. It doesn't have to work, right? And don't worry, there'll be clues throughout the day telling you, is it likely, has the probability diminished of this continuing to go in balance? So that's yet to come, okay? And you'll develop that over time. For now, just focus on the task at hand. Task number 2, emerging, continue to merge, split if you want, and we'll talk about that in a second. Mark them out now, okay? Sorry, just give me a second. You can see it's gone a little bit. I think I've got 2 here. There you go. Let's just remove that one. Sorry, I'm quite particular about these things. So we moved on to the next day, and like I said, we used that area, and then the following day, was there balance? Yeah, it was clear, right? So we're just going to merge those 2. Sorry, clicked merge with prior profile by mistake. Merge with next profile. Yep. So again, we're going to mark this. Okay. So can you see, generally, we try to stay in balance for about 90% of the day. So where have I put this in the expectations framework? It's the first one, isn't it? Balance, you expect it to stay balanced. So very much, excuse me, we tried to do what? We opened, we rejected one side of balance, we came in, we built some value outside. You might have tried to get short, doesn't matter. As soon as you came back into balance, you would have stopped yourself out. Some nice rotational opportunities, and then that's very late in the day. And crude does that, okay? Crude can do that in the final period. Near the close, it can just completely do something crazy. And you'll notice this. This is the point about markets having different personalities. Yes, it's volume and players, but what do the players typically do at certain times of day? You'll notice this. So that was very much an end of day move, which is quite typical. And like I said, you'll get used to this type of stuff. But generally, it respected the balance for the majority of the day, right? So I'm going to merge that. I'm going to merge that. Add this point of control in. Okay, and then I'll just adjust this here and here. Now this day, again, so this is the power, guys, of having contextual levels. Is you see what happened is basically the market opened up, it came down, and it essentially rejected the imbalance condition and came in and did what? Attempted to go rotational, then what? Moved to the other side of balance, built some value, nice shorting opportunities, because what? The condition changed. It went from imbalance initially, tried to go rotational, but didn't really build any value in the rotational area, then imbalanced, shorting opportunities, right? And do you remember what's the target? It's the other composite, right? So I'll put here, expectation is to go to previous balance. Where is it? Here. Okay, so it's essentially this area. And look, it did achieve it, just didn't achieve it in the same day. So look, everyone's different. For me, I probably, because of my type of personality, I like to just book profits, go to sleep. So my equity curve tends to be a little bit smoother. Whereas I know plenty of people who'd be shorting here and just say, look, do you know what? That's ultimately my target. So you'll be holding it for a couple of days. So those of you who contact me and say, oh, Envy, you know what? Is it possible using value analysis to hold for a period of time? Of course it is. You can see it yourself, all right? So you can have multi-day. I don't necessarily like to hold for like 2-3 days. I think couple days is, happy medium, because what it is I'm of the strong opinion that when you start getting into more than 2, 3, 4, 5 days, fundamentals do start to have a heavy impact, of course. Because the same factors can be repeated. But on a very short-term basis, I find fundamental factors aren't in the moment. Obviously, when there's a news release, no, you don't want to be slamming on all your risk, of course not. But investors tend to be quite irrational and emotional on a very short-term basis, so it's very difficult to predict all that stuff. I just go with it and have faith that the market, through transactions, has told me already what it's feeling about the immediate fundamental analysis coming up. Obviously, when you start getting into longer term periods, multi-days and so on, 100% fundamentals do have a time to smooth the volatility out and actually make more sense. So, I think 2, maybe 3 days max is a good time period if you want to hold stuff. And I'll be honest with you, I can't remember if I've mentioned it before, but it's definitely something that, every year I've been doing this for a long period of time. Every year I'm looking for things to improve. And as I've become better at identifying what the market is trying to achieve, I have realized I'm selling myself short a little bit just to have a smooth equity curve. Because if you think about it, I like to book profits. Obviously, it doesn't happen every single day of the year, but most days, as you've seen with my FX books and things like that, I've proved it in the audits, I do generally book profits every day. So what that means is my equity curve will be quite smooth, and then I might have a break-even day and then maybe a small losing day, but generally it'll be quite smooth. When you're holding like this, obviously there's going to be days where you don't make money. You might even go into loss, floating loss. You're going to be very flat until that winner, the 2-day hold, pulls through. But look at the end result. And I've recognized this throughout my career, that I have a smooth equity curve and other guys will have quite a lumpy curve, but you're going to make more money holding this thing because you're going to have more size on, because I'm scaling all the time. I'm taking bits and bobs, and my curve's going to be, and what that does is smooths out my equity curve. But I have noticed when I do my end of year analysis, 6-monthly analysis, quarterly analysis, I have noticed that I'm missing opportunity, but obviously I'm gaining here. I don't know, helps me sleep at night knowing that I'm booking stuff. And obviously it fits around my lifestyle, because I do this for a living, and obviously trading basically pays my bills and things like that. So I do, but I have built up a lot of capital, obviously, to allow me to really ram home the advantage like this. So it's something I'm working on. My point is, look, don't do what I do what suits you, and what you think works for you. And it's a lifestyle thing as well, right? I mean, I'm around most of the day, so I can manage these type of positions. For you, you might want to go and do something else. You might be doing something else in a different career, and you're doing this part-time. Fine. If you see an imbalanced opportunity and a nice big expectation target away, switch the thing off. let it run. Obviously keep an eye on it now and again to make sure that something drastic hasn't happened, and we'll talk about risk management and things like that, which by the way is very different to how it's done generally, but you know, we can talk about all that stuff. But I just thought I'd mention it because you can see here a great 2-day opportunity. So anyway, let's go back to the task at hand, which is this. You know what? At the end of the day, this it's kind of